Hello. Mic test. Mic test. Hello, guys, and welcome to the 139th edition of the Trading Opportunities webinar. And looks like the audio is working at my end. So in that case, let's get started with the very quick introduction. So, guys, as you guys already know, my name is Nirav. I'm the admin and owner of YouTube channel 50 Eyes Market Analysis, as well as the website 50eyes.com, where I have been putting out my work on advanced Elliott Wave and coming out with these weekly webinars. And today is the 139th edition of this weekly webinar series where we cover major global markets. And in the past 137 webinars, we have in total gotten 348 trades. We will see what happened with the last week's webinar, which was conducted on 25th of October as we go along with today's edition, right? And those of you who are joining in for the first time, we have been conducting these webinars for the last 2-3 weeks at 10 p.m. IST or 4:30 p.m. GMT. So just convert it to your time zone accordingly, right? Although generally the usual time is 7:30 p.m. IST, but I've been running it at a different time for last 2-3 weeks or so. With that being said, let's give you a quick introduction of the other stuff that I have for you guys or for public access. Those of you who are familiar with the basics of Elliott Wave, I advise you can check out my book, which covers intermediate to advanced concepts. Think with the markets. It's basically a book on the way I use in my own trading, the way I used to think about the trades. Apart from that, you can obviously join in live for our next webinar. And if you are complete new or beginner, you can check out the video course by visiting this link, which is the complete guide to professional trading with Elliott Wave video course, which has 1600 plus students. Lastly, for the past webinars which we have conducted and the YouTube videos which we have uploaded, we have created or compiled a list of the analysis with timestamps and how things performed or did not perform. This is the list. You can check it, or track record. You can check it by visiting this link at the top. You can see takes a bit of time to load, and as you can see, we have a very proper compilation of the date, the instrument which was being discussed, the analysis, and the outcome. And the main thing which I want to show you is that since 2016, since we started doing this, we have maintained a accuracy of 80% plus all these 6+ consecutive years. Well, with that being said, I would say we are kind of done with the introduction. Yes, last thing, if you want to see a complete coverage of these concepts which we discuss in these webinars or the application of these concepts, you can request details for the Slack private group wherein I post my live trades as well as analysis. Looks like the audio is working fine. And with that being said, let's now head over to our actual content. Those of you who are live in the audience, let me know if the audio and video is fine before we start off the broadcast here. I'm just loading up the last week's webinar. And let's start off. Here we are on the last week's webinar. Let's check what was being said on the chart of Euro USD. So this is the chart of Euro USD. But our main view was that we are possibly inside a C leg. It was unclear if the C leg was complete or still continuing. Yes, that was the main view. Thank you, Manuel. How are you doing? And thank you, Atul. So yes, as I was saying, last week we had the idea that either the wave C is complete or the wave C is continuing. In both cases, we were kind of unclear. On the upside, we were clear on the short side setup, which was to take shorts below this low, whatever that was. You can check the whole analysis by visiting the YouTube channel and checking out the 138th edition. Now let's head over to the live chart and see how things are on the live chart. So as you can see, our short setup was to look for shorts below 1.07636. So it has not triggered yet, and the market has kind of gone a little bit to the upside. It could be a correction continuation for wave two. And basically, what I'm trying to say is that overall, we are in an ABC kind of correction, right? And within this ABC kind of correction, I'm basically repeating the analysis from the last webinar, actually, nothing new. But this is the A here, this is the B here, and this will be the C. Now we are unclear if the C is complete here or it is still continuing. That's all I'm trying to say. If it is still continuing, that makes things a lot easier for us, because in that case, we will have wave 3 and wave 5 to the downside. So we will have two legs to the downside, which can give us a substantial downward movement. And the entry for that is very simple. I will look for shorts below 1.07636 based on this data feed. Right. And in case it is already complete, if the C is already complete here, then this market will just shoot up from here, shoot up from here. For that, we do not have a clear setup. I do have some ideas here, but that will become a little bit out of the scope of these free webinars. That kind of content I'll probably look to only update in my private Slack group. But we'll see if by the next week things become a little bit more clear. We will look to cover it here as well. For now, we only consider short setups below 1.07636. Longs wait and watch will probably follow up next week. Keep it in your watch list for the possible short continuation. Is the setup. Let me know, guys, if you have any doubts or questions so far in the discussion on Euro. If not, we are now heading for our analysis on crude oil. So let me see what was being said about crude oil in our last webinar. Good evening to you, Samuel, one of our regular viewers. And here is crude oil. Let's see what was being discussed. We had one setup suggesting we have a possible 1-2-1-2 continuation for the upside, and second setup in the yellow, which was suggesting that ABC is complete and possible correction may be downside. So basically, we had again unclear, not very clear views. We had a scalp setup here. As you can see here, we were looking for going longs above whatever this level was. Let's try and check that on the live chart now. So we have to check 25th October price and see if the setup played or what happened. Let's go to the hourly chart, 25th. One second, let me check something else. One moment. Yeah, there it is. 25th October. Okay, so the setup was to look for longs only above this level of 73.172. Never went there, instead gave a gap down. We know the war situation going on, and that heavily impacts crude oil. As I have seen in my early days when I started trading crude oil, there was also a war going on back then. And I saw massive, tremendous movements like these. It was not a gap. Bomb was dropped while in live trading hours, and the market just became exceptionally volatile. But anyways, so kind of volatile movements like that can be expected in this market at this point. But we are here not to predict uncertain things like that, like war. I mean, we are only here to discuss the price action using Elliott Wave. So as far as price action is considered, I have a little bit of a high time frame view here, which I'd like to share with you guys for quick reference. I am heading to a daily chart here. The main view I have right now here is something like this is what we are expecting, which will suggest further downward movement. And I'm assuming that this leg down ends over here. W or A, whatever, doesn't really matter. And the possible B or X either is complete. No, actually not complete. I'm under the assumption that it is still continuing. So I'm assuming that the second leg, this leg, is still under continuation. Perhaps it will become a running, perhaps it will become a triangle, perhaps complex itself. Whatever the case may be, this range can see some further movement. My bias is a little bit to the bearish side for now because I think this X may be continuing with the complex formation of A. 1 second, is that the count? Let me see. A up and then A and then ABC for B and down for C. Yes, my bias is that we are possibly seeing a wave B here, this being a possible zigzag in case. Let's see dot A, dot B, and dot C for the possible wave B of the X. Let's call it circle degree, W circle degree X. So that's just my one main assumption or the main theme. There are multiple other themes that can play. Of course, I'm just stating this obvious one, and I don't really care much about what happens with the X formation, etc. My current bias, which is more important, is shifting towards bearishness, and I personally have a let's place of 68.10 and 66.89. So basically, I will be looking for shorts below the level of 66. Keep in mind, if you are using a different data feed, then the prices will be a little bit changed. We are using this data feed, right? So my current bias is a little bit bearish. Of course, do not think of this count as the holy grail or the one single count. Counts keep changing. That's the reason I do these webinars on a weekly basis, and I do have a private Slack group for that reason alone. If everything was so set and go or concrete, I wouldn't need to update anything, and there will be no need for any updates or anything at all from my end. So anyways, for now, bias remains bearish. This is the setup I'm looking for, and that's about it. I'm not really interested in the upside. Perhaps maybe some scalps I may take at a later point, but for now, that's my longer time frame take. Now, that being said, let me give you a counter view. The counter view is, let me just use the yellow color for it. The counter view is that this market can literally fluctuate between this range. Do not take it as a concrete range. A little bit expansion to the upside, little bit expansion to the downside is definitely possible. But somewhere between 98 to 57, that's a huge range, I would say. But let's say towards the bottom part from 76, 75 to 57, the market can fluctuate a lot before giving us any concrete fall or clear trendy move, right? Let's just say that, right? And as a matter of fact, if it takes out the low of a 64, then it has also achieved our minimum downside level for requirement of wave Y. So kind of we'll leave it for the next webinar's discussion if required. But that was the counter view. Keep that in mind. The bias remains bearish from a swing perspective. And with that being said, I will say it's a complex market, and also chances of becoming more volatile are possible because of the global situation. So keep out of it if you are not a professional. I mean, if you haven't seen these situations before, which means if you are not in the market for last 8-9 years or something. Anyways, with that being said, I'll just leave this chart as it is, and we'll move over to the chart of gold after we check out what was being said in our last webinar's discussion on gold. So here is the chart of gold from our last webinar. Let's see what I was saying. So we seem to be having the setup that wave 4 is under continuation, and the long setup was 2756 plus, that is looking for longs above 2756 was the main setup. As a matter of fact, we had trades placed on this counter. One was in profit, one was in loss. I think, let's see, booked profits on longs, target hit. What was the entry? Let's see, added more longs for target 2769. Yeah, so there it is. This is our entry. Entry is at the price level of 2755. And let's see what happened afterwards. This was the entry on October 29th, by the way. After that, added more longs, and then target was hit. Target was hit and exceeded actually, and the target was, as you can see over here, mentioned 27. What? Oh, that's a stop loss. Targeted positions held, expecting further up move for stop loss 2727. Book profit on all longs. Here's the exit. 2772. So this was the trade which was posted as per our analysis from the last webinar. And this was another entry, a minor entry which we had taken, which did not play out. And I have posted all details, stop loss it, etc., etc. So that's how we operate in our Slack group. Very clear updates, no matter what the outcome is. I'm always posting my views as well as trades. So getting back to our discussion, at the time of this discussion in the webinar, the price was 2739, expecting longs above 2756. And let's see the live chart now instead of past boring data. So once again, 2756 plus, right? Here's the live chart. 2756 was breached here. As you can see, if you had just been following the webinar, if you are not a member of the Slack group, you should still have been able to catch this leg very clearly. A good enough move here. Right after that, I was also long here, thinking that this is just a sideways move. My stop loss was here around 2772, and entry was around 2780, roughly speaking. I'm not very sure about that entry. Anyways, this strong leg down suggests that something else is going on, and basis on that, here is our updated count. I am assuming that we are seeing a double bracketed wave 4 in a possible zigzag formation, which would suggest that we have one leg remaining to the downside, which will suggest that I have some short scalp shorts, to be more precise, possible once this market takes out this low or goes near this low. Now, this can be a little bit risky because the overall trend still remains bullish. So any shorts taken should be smaller in position. That's my judgment as of this point in time. And my setup is that if this really is a flat, then I'll look to add some shorts here around 2736. And if the market propagates to the little bit sideways or upside, then I'll possibly add more near the upper range to see a small move, that is a move below 2731. Alternatively, you can say that below 2731 we have also a possible scalp short possibility, and that will again be even more riskier because the downward move will then become even smaller. So there's a counter trend move. That's why I'm saying it's a risky affair here. The better strategy here will be to wait and watch for this C leg if it happens as expected to complete. And once the C leg is complete, we can then look for possibly upward movement again, or the upward movement to resume, and that will be in alignment with our higher time frame analysis and higher time frame counts. For those of you not following us for the past few webinars, we have been able to predict all, I would not say all, most of these movements, including here parts of these movements, as well as many reversals. I would not point out because I don't know exactly which were discussed publicly, but in our private Slack group, many of these reversals have been spotted and traded as well. Right. So gold has been doing really well in terms of clarity for our trades and analysis. And the current bias remains short-term bearish. And swing perspective, wait for wave C to complete to add longs. Short-term perspective, scalp shorts possible, but highly risky. Can be highly risky. That's about it for our take on what we call the chart of gold. And with that being said, we'll now head over to our chart of S&P. Let me take some quick notes here before we move forward. And of course, guys, if you are watching this webinar, liking the content, do not forget to hit the like button before leaving. And if you are liking the content, also make sure to share this content. That's definitely helps us in increasing more views and getting the required audience or the suitable audience for our content. BTC analysis, Rafe is saying BTC analysis. So we stopped covering BTC, I think 2-3 webinars ago. But yeah, of course, I'm tracking it, so we'll probably look at it near the end, Rafe. In the meantime, let me just take quick notes. And if you have any doubts on questions on gold, you can just post it. Let me just remain silent for a bit. All right, so now let's head over to our next chart. I don't see any questions or doubts or queries. So here is our chart of S&P before we move over to our last chart of Nifty. So before discussing this chart, let me quickly load the last webinar's discussion so that we can see what was our update here, or what is our update here. So with that being said, here is the chart from last webinar's discussion, S&P. Let's see what we were saying. Somewhere here we are discussing S&P. The idea is change in the last webinar. We discussed this higher time frame daily chart. As you can see, idea was this is wave 3 and possibly a correction for wave 4 is ensuing. 5890 is the level of resistance, and 5090 is a downside level till which this market can swing. Of course, further levels are also possible, but this was the basic idea. I think I may have discussed something more concrete here, but that you can check out by visiting the last webinar. And there was a bullish setup here, only activated above 5890, right? And with that being said, let's now head over to our. So this was the whole take, H1, H2, and the detailed discussion. So now let's head over to our chart of S&P. As you can see, 5890 was kind of where the market has reversed. I think it is on 17th October. So yeah, the market never breached that level after our discussion on 25th October. And I, at this point in time, have a short position, swing short position on S&P's 500. I did yesterday itself, as you can see. Now let's see what the idea is, that why I have taken this swing short position before heading any further. So this swing short basically is in alignment with our bias that this market is. 1 second, let's remove this. So our bias is that this market is in a possible wave for correction. If this is correct count, then this will be the 3 circled, and as we discussed last time, this 4 is expected to move lower. In general, we want to see the wave 4 at least go and test the high of wave 3, so that gives us a target minimum at 5684. And with that being said, we are looking for 5684 on the downside on my shorts, or I'm looking for this. Good morning to you, Luis, one of our regular viewers. So as I was saying, we are looking for 5684 minimum. If this count is correct, then generally we expect a little bit more, actually quite a bit more than 5684. That's the base target, or very small short-term time type target. So that's why I'm holding short positions on this counter. Count wise speaking, we will call this structure and A down, B up, and C down, a kind of a maybe a flat correction. Who knows? I don't really care at this point because even the minimum is not done. So only time we will be wrong is if this market takes out the high, which is 5889. I currently have stops placed around 56. No, sorry. Let me check. 5820 for my current short positions, but that is in alignment with my entry and short-term counts. That can change. Technically speaking, 5820 is good for short-term, but on a high time frame perspective, 5890 is the technical stop loss, and this is the expected count. Could go further lower, could go a little bit lower. Let's call it 5550 as our possible downside target, which can then follow further lower targets with target minimum at 5684. So that's my take on S&P's 500. Actually, quite simple analysis here. Nothing very groundbreaking, and the counts from our last webinar also seem to be holding here. So it's just a wait and watch for now. I don't have anything much further to add here. Both upside, downside views positionally we have discussed. That being said, I will just wait a few moments. If you guys have any doubts or questions, you can just type them in the live chat before we head over to our last chart of Nifty. And of course, those of you who just joined in for the analysis of S&P's 500 or use the timestamps to navigate to S&P's 500 count, please make sure that if you are liking the content, you hit the like button, and much more importantly, you share the content with the audiences which you think will like it, or on your social media, so that we get the appropriate participants for these webinars, right? And thank you very much for those of you who have been continuously discussing and sharing about our work on social medias. We have so far not very consistent, I would say, but we have acquired a decent amount of views, including second last webinar 1.3, that is 1300 something views, and this one almost went near 800. Would really like to see 1000 plus on every webinar, but that's all lies in your hands and the mystical YouTube algorithm. That being said, I don't see any questions here, so I'll just move over to our last chart of Nifty's 50. Obviously, let's first discuss what was being said in our last webinar. So here is the chart of Nifty 50 here. Let's see what was being discussed. So we had zigzag kind of move, which we predicted in our last webinar, and the analysis was actually quite simple. Let me see if I can point out to the exact phase where we are discussing it. Yeah, so here is the wave C being discussed, and the idea was very simple, that if the market is heading lower for what do you call wave C, then we need to take out 24090. If it's complete, then it will not see another leg down, right? So that was the main theme here. 2490 lower than 2490 was the setup for possible shorts here. Let's go and check the live chart. So here's the chart of Nifty 24090, 25th October. Here's the low. So since then, the market has actually not taken out the low, and it has not even given us any clear bullish sign. Now, at this point in time, this market is a little bit unclear, I would say. There is a possibility that it breaks the low for C and gives another leg down. This will be what you call a double zigzag formation, which can also be represented by a W, an X, and a Y. So if that happens, we'll call this leg as a W, this leg as an X. I think the X can take more time, but then again, we don't know these things, and this leg as a Y. Right. So if that happens, then we will look for further shorting this market. Again, that goes without saying. We are looking for break below 24073, which is the recent low. Unless we see a break below it, I am not very interested in shorting the index itself. Perhaps stocks, there are sectors which are weaker than others. Again, all of those things we cover in the private Slack group. We have a dedicated section for stocks. So if you are interested in details for that, you can again check the details by visiting the link, which I have forgotten to run. Now it is showing below the video, right? So as I was saying, we are only looking for shorting this market below the break of the mentioned level. Otherwise, we do not really care to enter shorts. As far as the long setups are considered, I'm not looking to look for any longs unless we see specific sustenance above 24,600 levels. So this is not a mentioned level for adding longs. This is a level where I will reanalyze the market to see if we have any sustaining possible long setups. So these are the two main levels to look out for. At this point, setup on the short side is clear, and wait and watch for a long side. And as there was someone requesting look at the BTC chart, let's have a look at Bitcoin at once. and see what's really going on this counter here. We have stopped covering BTC in the last 4 or 5 webinars, but let's see what's going on here. So here is a chart of BTC, and this is on the daily time frame. The idea remains kind of the same, which we discussed in our past webinars. We are seeing a resistance incoming at 83,200. Keep in mind the data feed here is important because the price variation will be a lot. We are using this data feed. If you're using something else, their mentioned levels will be a little bit different. Main idea is that we are looking for a possible impulse. We are unclear if the 4 is complete here. If it is, it will cross 83,200 with a little bit ease and sustain above it, perhaps. It does not have to sustain above it. It can just fluctuate near these levels and then go up. But generally, that's the idea when you are projecting a possible resistance level. Anyways, wave 4 is either complete or continuing is our main idea. So if it's continuing in time, it again will remain range bound between the levels of 49,600, 83,200. So that's the positional view. Again, not very helpful for short-term trading, but that's it. First view is 83,200 above longs. Second view is sideways propagation between this mentioned range and then longs. Well, that's about it, guys, for our discussion. Today, we have covered all the major markets here, and hopefully you enjoyed the content and obviously are benefiting from it. I hope so. And with that being said, I'll take a few moments here. If you have any doubts or questions on this last discussed chart, you can just post that in the comment section. Otherwise, we will just move over and close this discussion. Right. Thank you for the guys who waited till the end, and thank you for the guys who keep sharing the content and bringing us or bringing the attention of our work to the right audience. Thank you very much. I'll see you guys in the next webinar, and take care.